Thursday, November 10th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how the Fed could be ready to pivot. And yes, the credit market is on the brink of some kind of implosion, and it's affecting everything from cryptocurrencies to the stock market to the corporate debt bond market. And there was even a Fed president yesterday who said the Fed should think about slowing down its rate hikes. And today, of course, we've got the CPI data, so we're going to look at that today. Before I start, I like to let you know that I'm fairly active on Twitter. My handle there is @Maneco1964. I am there as Maneco64, but the handle is slightly different. I think I have over 11,000 followers, but one of my followers noted that someone had impersonated me, and that impersonator had over 1,000 followers. So I recommend you go on Twitter and check my real handle. The impersonator used @Manek1964, but I think he's been removed. Just wanted to let you know that. The other thing as well is what's happening in the crypto market. And as you know, I don't really follow the crypto market that much, but I did yesterday because it was a huge event what's been happening with this exchange and token FTX. And last night, London time, I was on the live stream with Nobody Special Finance, and we spoke for about an hour with a couple of other guys about what's going on. So I recommend you watch that if you want to know a bit more about it. It doesn't just affect the crypto market. I'll put it up in the cards and in the description. It's also in my community tab. So yes, a big day today for not just for the markets, but for the Federal Reserve and its policy stance. And I think the Federal Reserve must be getting concerned. And of course, today we have the CPI number. Many people call it the inflation data. I like to call it more an indicator of inflationary pressures because rising prices are backward looking. And why is that? Well, because inflation is the creation of currency and credit out of thin air. It is the QE. It is the deficit spending by governments. It is the low rates, resulting in a lower value for the currency. So what we're getting now is just like a reflection of that it's the symptom. But be as it may, it's an important number because it has been above 8 for quite a while, and it's expected to come out at 8%. Some people expect 7.9. So if we get a drop to 7.9% rise year on year, from 8.2 in September, that will be, I would say, fairly positive for stocks and bonds. I think it will be positive for precious metals as well, for commodities, because that will mean that the Fed can take the foot off the brake in the next meeting in early December. And yes, I'm not going to talk about the fact that I believe that prices are rising a lot quicker than just 8 or 7.9%. We all know that, of course. Here in the UK, grocery prices are rising at around 15%. And if we look back at the way the BLS used to calculate CPI back in 1980, it's more like 17%. But it's not the point of this video, of course. It's just to see what's going on today. And it's interesting that yesterday, the Chicago Fed's president, Charles Evans, he said that it's time to slow the pace of rate hikes. And yes, he is leaving or retiring in January, but still he is a Fed president. He's been there for 15 years, and he's known to be a dove. But there's many Fed governors or presidents, sorry, or board members that were doves up until a few years ago, like Bullard, who have become hawks. So it's not really relevant, I would say. And I'm going to put a link to this article below in the description. It's under archives.ph. It's a Bloomberg article. So if you don't have a subscription, you can't read it. That's why I got it under archive.ph. And what he talks about is that the Fed also has an employment mandate, and that he's concerned that if they keep raising rates as quickly as they have, they've raised the Fed funds 4 times by 75 basis points. Right now it's at 3 3/4 to 4. He thinks that it could cause problems in the economy, and he's right about that. The problem is that I think inflationary pressures are going to remain, but it shows that the Fed is cracking a little bit. We're seeing, of course, not just the treasury market, government bond markets drop quite a bit and yields rise, which is going to lead to higher financing costs for the government, but also the mortgage market, the real estate market. We saw, I think it was Wells Fargo, their mortgage originations have dropped by 90%. They're going to let a lot of people go. It's affecting the whole economy. And I think eventually, though, yeah, we could see the CPI drop a little bit. But longer term, we are, I think, in a stagflationary environment. And the Fed's going to have a tough time. And we're starting to see things like the HYG, which is the high yield corporate bond, which is like a indication of the health of the credit market, reaching levels that we haven't seen since March 2020, when the whole system imploded. And I was reading Michael Oliver from MSA. He nicely sends me his stuff. I recommend you look at MSA.com. They have a good service. It's olivermsa.com. But he's talking about that there could be some credit market event, and that the high yield corporate bond ETF is showing signs of capitulation and a crisis. So could a lower than expected CPI help everything? Could it put the Fed on the path of pivoting? I've been talking about the last few days that the positive moves for gold and silver, not just in dollars, but even other currencies. In sterling, we've gone back above 1,500. Could be a sign of a pivot. I told you to listen to my live stream that I did with Nobody Special Finance, but I'm going to put also a link to a video on Hedgeye Investing Summit, and it was from October 11th this year. And Hedgeye spoke to Mark Cohodes, and this is what Mark Cohodes said, and I quote, "FTX is dirty and rotten to the core." So I recommend you listen to that. And yes, the FTX fiasco, of course, has hit cryptocurrencies a lot. I think Bitcoin had a 15,000 handle earlier in the last few hours. It's probably back above 16. But you've had the mainstream financial world, people like BlackRock, Ontario Pension Fund, Sequoia, Paradigm, Tiger Global, SoftBank, Circle, Rabbit, Alan Howard, who was, I know Alan Howard because one of the guys I worked with, that was his best client from Brevin Howard. And Alan Howard talks so fast. the guy I worked with, who was the head of the desk as well, he had to go to listen to the tapes to get the order right, because he couldn't ask him again, can you repeat it? Because he'd get very angry. Multicoin, Vanek, Temasek. I think Temasek is a Far Eastern fund from maybe Malaysia or Indonesia. I'm not sure. But all these people put money into this FTX. The guy behind it is a 30-year-old guy called Sam Bankman-Fried. And he was hyped up as the next JP Morgan of the crypto space. But unfortunately, he's bitten the dust. I think he's gone from being valued at, 20 billion to under $1 billion, which is still a lot, but we'll have to wait and see what happens. So I think that also hurt sentiment in the stock market, because you've got all these Wall Street giants losing their shirt completely in this FT coin or FTX. And it's reverberated throughout the capital markets. And I noticed yesterday, though, that the Dow, of course, and the other major indices lost quite a bit of ground. Let's see, we were down like 2% across the board. I think the Dow was down just under 2%, 650 points. S&P was down 2%, and the Nasdaq was down 2.5%. And despite that, I was following gold and silver, of course, as I do, and the rest of the markets until the close. And gold and silver, gold managed to close above 1,700 despite everything, and silver closed just above 21. So they performed quite well, relatively well. I have to say the miners, especially the silver miners, my silver shares, silver miners got hit quite hard. I don't know what's going on there, but I'm holding on. I think what's going on now is showing more and more people that it's good to have something real, maybe something that you can hold on, some commodities as well, aside from crypto, tech, bonds. Yeah, this is really, I think, going to change people's perception. I think it's a huge blow for the crypto industry, and I'm not criticizing Bitcoin here. I think even the head of Binance, who was supposed to bail out FTX, but later on said, no, we can't do it. He said it's going to hurt the reputation of the crypto world quite a bit. It will take time probably to recover. So that's what I think is happening right now. And we'll just quickly go through the markets. I'm a little later today. It's just gone past 8:30 a.m. London. So yeah, as I said, gold is holding up here. It's at 1707. Low's been 03 and the high 1712. And yesterday during the day, gold rallied above 1720. So it made a new high. Silver as well did quite well. It got up into the 2160s. Right now, silver's at 2103. The low has been 2094 and the high 2122. Stock markets are a little higher this morning. I just go through it quickly here. The Dow futures is up 0.2. Nasdaq 100 futures up 0.4. S&P is up just above 0.25%. Quickly go through the currencies. Sterling is up 0.25%, 113.82. The euro is down 0.2 at 99.90. The dollar is down 1/8 versus the yen at 146.26. And the dollar is unchanged versus the Swiss franc at 98.52. The dollar is down 1/4 versus the yuan at 725.50. The dollar is pretty much unchanged versus the ruble at 61.50. To the other currencies here, we got the Aussie dollar down 1/3, 64.10. Dollar is unchanged versus the Canadian, 135.27. And the Kiwi dollar is down a quarter at 58.65. To the general commodities, we've got WTI crude down a third at 84.90. Brent is down a 0.2 at 91.90. High grade copper is down 0.2% at 366.80. US nat gas is down 0.5%, just below 6. And the Dutch nat gas futures, let's see where it's trading this morning. Well, it's up 2% at 115. And we'll finish off quickly with the bond market. We'll first look at the UK 10-year yield. That's up 4 basis points at around 3.5%. The 30-year is up 4 at 3.6. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.